Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC TV 18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV 18 Motilal Oswal studios. Wednesday morning, middle of the week, lots to talk about, lots behind, lots ahead. I guess that's the best way to put it. I'm Prashant. With me, my colleagues Nigel and Survi. Guys, good morning.
Hi, morning.
Morning, both of you. Welcome back, Nigel.
Morning.
It's a very important day.
Yeah.
There is the Fed meeting. Obviously, it's the Prime Minister's birthday. Wishes are pouring in, including from his good friend, Mr. Donald Trump.
Well, absolutely. That's the wish that the market has taken note of. And, we'll track that development as well.
I think that is a big talking point this morning, right? And interpreting that birthday. Did you guys ever get a birthday message? I don't think any birthday message will be discussed so much.
As much, yeah.
Right?
Birthday diplomacy now, I think, from Washington.
It's power-packed. Let's just take it from the top in terms of what you need to know as we start this day. So first up, right, that birthday wish and the back and forth. So Prime Minister Modi thanked President Trump for birthday wishes. Both leaders underscoring closer India-US cooperation. Actually, why don't we put that up? The original birthday wish from President Trump and, of course, then the reciprocation from Mr. Modi. So just had a wonderful call with my friend, writes President Trump, Prime Minister Narendra Modi. I wished him a very happy birthday. He's doing a tremendous job. Narendra, thank you for your support in ending the war between Russia and Ukraine. President DJT. That's the exact reading of the social post that was put out. And of course, Prime Minister Modi is saying, thank you, my friend President Trump, for your phone call and warm wishes, warm greetings on my 75th birthday. Like you, I'm also fully committed to taking the India-US comprehensive and global partnership to new heights. We support your initiatives towards a peaceful resolution of the Ukraine conflict. Both essentially talking about the Ukraine conflict. So, and I think that is essentially what has sparked some amount of speculation whether because remember, we are dealing with the 25% tariffs purely on account of, the U.S. essentially saying that we are helping fund Russia's war in Ukraine, both mentioning Ukraine, Russia, Ukraine, ending that conflict. Are we getting closer to it? And I think we won't have the answer. There'll be lots of opinion, etc. But one thing is absolutely clear. What started about 2.5 weeks ago, that thaw is thawing still. Tensions were high. And now, of course, tensions have been smoothening out and they're coming off in a nice way. Timelines are difficult to put, but this is absolutely the good direction, the direction to go. Now, US and India, if there was that one day of talks which took place in New Delhi, and trade negotiators said that the talks were positive. Both sides agreed to, and I quote, intensify efforts to reach a deal. And of course, now the next round of talks will start. So that's essentially India-US, but I think that's the big dominant driver today. US equities, not very much. They kind of sort of drifted off record highs ahead of the Fed meeting. The Fed decision is tonight. S&P was down about 0.13%. The market is pricing a cut of 25 basis points. And I put this stats yesterday up as well. The dollar index so far this year is down 10%. US 10-year bond yields are down 50 basis points from the highs in May. So into the Fed pivot. And of course, post the Fed pivot as well, we'll see what happens. Markets, of course, will gauge if this is a one-and-done kind of a cut or this is the start of an easing cycle. And that's where the commentary and the press conference from Jerome Powell, etc., comes into play. Because if it is the latter, then I think there is a bit more. If it is just one, the 25 basis points is absolutely fully priced in. What if you get the suggestion that, well, the Fed is now done with 25 and then we'll wait for data. We won't do anything now. There's a risk that the market sells off a little bit, pulls back a little bit as well, because this is a market which is at all-time highs, fully pricing in this at least 25 basis point cut. So in that sense, tonight becomes more important than other recent Fed decisions. Reports, US-China is the other one. Reports that TikTok buyers will include a group which has Oracle, Silver Lake, Andreessen, and a few others as well. But these are reports for now. But TikTok, of course, is a big one between US and China as well. Now, just to tie in the levels here, Nifty broke above its previous high yesterday. So we had a decent move which stayed with us through the course of the day, 0.7, almost 0.7 higher. Next stop is about 25,500, 25,550 basically. Nothing but, we've cleared most of the daily moving averages, hourlies, etc. You can look at the big retracement from the fall from the all-time high to the recent low, but we're not there yet. So 25,550 first is the first stop. Support is the 40 hourly, which now, of course, has been left behind at about close to 25,000. I mean, roughly 25,000 is the big level, which should not break on the downside. Bank Nifty, 10 days in a row, the Nifty Bank has been higher. It's closed above the trend line and the 40-day exponential moving average as well. So this one has also cleared most levels. Here, the retracement is 61.8% of the full fall. 55,175 is that number. The first immediate resistance by the way, we left off exactly there at 55,175. And then we'll see if there is more. But, I mean, we've got to get a clearing off this level for further upsides. And support is 54,746. Gift Nifty will give you a quick sense of how we're likely to start. And then we'll pick it up from there. Market's done quite well off the lows of about 24,400 was the low. And we are now, of course, looking at 25,200, 25,300 kind of level. So it's been a nice one-way lift that we've had coming into an important decision, which is tonight, the Fed one. Nigel is standing by with the F&O stats. Nigel, the big kind of sort of takeaway, especially yesterday, was it a lot of short covering? And how's that positioning moving?
Well, that's right. Good to see some bromance that's taken place overnight as well between President Trump as well as Prime Minister Narendra Modi. And that will definitely help sentiment. Now, in yesterday's trade, a couple of factors played out. One is that the institutions, they were net buyers. The FIs as well were net buyers. Institutions being on the buy side, that's positive. The second factor, as you pointed out, yes, there was a bit of a short covering bounce. And normally you have the live indicator during market hours. And clearly both the Nifty and the Nifty Bank were higher and the open interest was lower. So that told you that, in fact, there was some short covering bounce that played out. And that perfectly tallies in with what the FIs did. Because in yesterday's trade, close to around 11,000 contracts were covered out on the short side, though the FIs continue to remain aggressively net short at around 88% of their positioning on the short side. So, yes, there was a bout of short covering that did play out in yesterday's trading session. And take a look at what's happened in the last few days. We had highlighted this, right? In percentage terms, the net short positionings of the FIs, well, they were at around, at around that 92.7%. In absolute terms, it was 1.91 lakh contracts. So close to around 32,000 contracts have got covered out. And you have the markets that have bounced up close to around 2%. So maybe bulk of that short covering is still pending because the Nifty as well as the Nifty Bank are up only around 2%. And yet the markets are aggressively net short. That's from the FI perspective. So that's an important data point. Maybe the short covering bounce is still due even from here on. Moving to the options data then, the 25,200 call, the 25,300 call. Between them, close to around 30 lakh shares were added there. But just take a look at what the bulls did in yesterday's trading session. The put writing, that's come back into play. Close to around 50 lakh shares getting added out there. Aggressive writing is what you've seen. And because the put writers have come back into play, now you're seeing the PCR that's gradually moving toward the higher end of the range at around 1.3 or thereabouts. And yesterday you had the Tuesday weekly expiry that played out. So that could have been another element that pushed the markets higher. Moving to the levels then, the 25,050 to around 25,150 mark. That's the important band you want to look at. And you don't want that to break on the downside. Going by the options data, though, the 25,400, 25,450 levels, well, that's extremely important. The Nifty Bank, after underperforming, that's finally found its form, which is good times for the markets then, because that's bulk of the contribution on the Nifty. We have seen now it's conquered the 20 DMA. Good news. What's the next stop? You're looking at around the 100 DMA. So you're close to around 300 to 400 points away from current levels. That's where the next crucial resistance is at, 55,500 or thereabouts. Stocks that I'm looking at for today's trading session, one such stock will be Tilaknagar Industries. Yesterday, the stock bounced off the low of the day. It ended at around 20 DMA. So that's point number one. Point number two is there was massive delivery-based buying in yesterday's trading session in comparison to the averages. And point number three is it's been a relative underperformer in the last 1 month or so. And now it's seeing delivery-based buying ending at crucial technical levels. I'll keep an eye out on this stock even for today's trading session.
Okay, all right. So let's see if the bulls can prevail and continue their good run from yesterday, because yesterday, after taking on those critical resistance levels, they are looking in top form. And we have positive global cues. We have, of course, the tweets and the phone calls. And Asian markets, for what it's worth, they are tracking some gains as well, though it's a mixed picture across Asia. But some of the major markets, like, say, for instance, Hong Kong or Japan, they are tracking more gains, and there is overall optimism around that expected Fed rate cut. There you see the Hang Seng is up about 0.7%. Not that there's been a one-to-one correlation between China and India over the last couple of months, but generally positive sentiment on equities. Let's get you a couple of calls then. The first one's coming in from Morgan Stanley. Rhythm Desai of Morgan Stanley says that while India continues to report return on equity higher than global averages, the gap contracted in 2024, reflecting a growth slowdown in the second half of the year. He believes that ROE is set for higher levels over the next 3 to 4 years. He adds that rising ROE equals rising share prices, more so as it continues to significantly exceed long bond yields. He believes that ROE gains will come from mostly domestic cyclical sectors and rate sensitives, and the key risks would be global growth slowdown and higher global commodity prices. He says Morgan Stanley is currently overweight on financials, industrials, and consumer discretionary to gain exposure to India's improving ROE story. So those have been the big long calls for Morgan Stanley for a while. One more call. This one is from Vikash Jain of CLSA. He says that India remained the least favored emerging market for FIIs in August, with outflows of about $4.3 billion across all fund categories, making it the worst performing large market in US dollar terms. He says that FIIs are tracking another $0.1 billion of outflows, which is roughly $100 million of outflows so far in September. He says FIIs have rotated into consumer discretionary, driven by the GST rate cut optimism, with bulk of the allocation going to autos. He says that CLSA has added Ultratech to its India-focused portfolio for exposure to potential margin gains from continued pricing discipline and favorable GST changes. And they currently favor consumption, real estate, oil and gas, and IT in their portfolio. That last one's pretty interesting. So overweight on IT, that is CLSA for you. And they recently went overweight, saying it's a good tactical play.